This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
Jittery markets just when you thought it might be okay to step back into the market. A fresh worry appears, a shooting. In the heart of the Canadian capital, a soldier dead, a gunman killed in the parliament there. That, plus plunging oil prices, send stocks tumbling.
Blue chip disappointment. Dow component AT&T reports weaker than expected earnings after the closing bell and warns that revenue won't be as strong as first thought.
Recall widens, and now the Manhattan District Attorney is reportedly investigating the company that made those faulty airbags as the auto industry deals with another serious and massive safety recall. All that and more tonight on Nightly Business Report for Wednesday, October 22nd.
Good evening, everyone. Two powerful forces combined today to make already jittery investors even more nervous, sparking a big sell-off in the markets. One trigger, another sharp drop in the price of oil. The other, an act of brutality that rattled investors in two countries and around the globe. A Canadian soldier was gunned down outside of a war memorial in that country's capital today. That was followed by heavy gunfire inside Canada's parliament by what appears to be a lone gunman who was shot and killed by police. The motive, unknown. The identity of the shooter, unclear.
What was clear, especially after the U.S. Embassy was locked down, was that investors were rattled. Volatility spiked and early market gains were wiped out, sending stocks tumbling. At the close, the Dow was down 153 points. The Nasdaq ended 36 points lower. And just one day after its biggest gain of the year, the S&P 500 fell 14. After remaining stable for a few days, oil prices fell sharply again today, down nearly $2 a barrel to close at the lowest level since June of 2012. Bob Bazzani has more on today's sell-off in stocks and oil from the floor of the New York Stock Exchange.
Stocks started the day mixed, but began moving lower about noon Eastern time on two developments. First, the Canadian shooting incident was a source of considerable confusion midday, as it wasn't clear how many gunmen were involved or what the motives were. But lone wolf-type attacks are a source of concern and can affect market psychology.
Trying to disrupt average life by taking shots at people and, running down with cars. That reintroduced the idea of risk to the market.
A second development also weighed on the markets midday. Oil has renewed its decline, which was a significant part of the reason the markets dropped last week. The catalyst today occurred at 10:30 a.m. Eastern time when the Department of Energy reported a big build in oil inventories. West Texas Intermediate crude immediately dropped almost $1. Although it recovered its losses in the next hour, it then dropped again around noon Eastern time. That drop occurred independently of the Canadian headlines coming out at that same time, and it put additional pressure on the market, with energy stocks leading the market down. The problem is simple. There's just too much oil in the world. Although oil dropping is good news for the U.S. economy, the decline in oil has become a proxy for deflation and slowing global demand in general. And so it's been viewed with some concern. For Nightly Business Report, I'm Bob Bazzani at the New York Stock Exchange.
Well, it wasn't just today. Investors have been nervous for weeks, with new figures showing that they pulled out nearly $6 billion from stock funds in the week ending October 15th, as the market skidded on worries about slowing global growth and fears about the spread of Ebola. The Investment Company Institute also says bond funds saw a pullout of $4.5 billion during the same week.
Here to provide some perspective on today's stock market action is Nick Colas. He's Chief Market Strategist with Convergex. Nick, the market was higher earlier in the day, but was it just ready to pull back, or were these two instances that we talked about, oil and the shooting in Canada, a real trigger for something?
It absolutely was a day that should have been very quiet. We've had 3 very strong days after that really strong pullback last week. So as we began the day, it looked like we should be fairly stable. And it was that news out of Canada and then the drop in oil that really sent stocks down towards the end of the day. But it should have been a quiet day.
You know, Nick, we hear from a lot of people market strategists talking about the markets in terms of the fundamentals. And then we have others who talk a lot about the psychology of the markets and the fear factor. It seems that investors are much more sensitive these days to headlines rather than the fundamentals. Is that how you see it?
Yeah, absolutely. There's 2 reasons for that, and I think both equally important. The first is the Federal Reserve is ending its QE program later this month, and that'll give investors something to worry about as far as what the pace of recovery in the U.S. economy is going to be without that stimulus. The second point is that fear tends to weigh on investors in the way that you've seen over the course of the past couple of weeks. It isn't a problem until it is, and then it's a pretty big one. Fear is a very powerful motivating factor in markets, and we're seeing that right now.
It was 1 week ago today that we were all talking about a correction. The market was down 400 and some odd points that day. The Dow was, at least. Do you think now, in retrospect, that was the bottom for whatever correction we went through?
You know, my perspective is the following. It was a bottom. It's probably not the bottom. But even if it is, it's very important to note that volatility will probably pick up between now and the rest of the year. We're pretty optimistic on stocks, U.S. stocks in particular. We think this is a pretty good economy, everything considered. But volatility has been artificially low. It's going to start going higher.
One thing I noticed today, Nick, was that the utility index was at an all-time high, showing that a lot of investors are putting their money in a safe place. I mean, given that, are you changing your outlook or your investment strategy?
We are not, but you raise a good point. The utilities up 16% or so on the year, best performing group in the S&P 500, just highlights how important it is to stay diversified in a stock portfolio and overall. A lot of people were bad-mouthing bonds earlier in the year. That proved to be horrible advice. Bonds have done very well, hence the utilities doing very well. Stay diversified through this period of volatility, absolutely.
All right, Nick, thank you very much. Nick Colas with Convergex.
More corporate earnings today. After the market close, investors got a wake-up call from Dow component AT&T. The telecom giant reported quarterly earnings below analyst estimates. It earned 63 cents a share, missing by a penny. Revenues also short of forecast, $33 billion on a lower than expected number of new wireless customers and a slightly higher churn rate of customers dropping out of their plans. But the number was higher than last year. AT&T shares were initially lower in after-hours trading and were down a fraction during the regular session. Morgan Brennan joins us now with more on all of this. So, Morgan, you've looked over the numbers. What's the one key takeaway?
Oh, my goodness. Well, the key takeaway is the fact that we've just seen stiffer and stiffer competition among the U.S. wireless carriers, and that's really starting to play out in AT&T's earnings. So we had that profit miss. We saw less subscribers added than analysts had expected. But I think most tellingly is we saw the company revise downward its sales outlook for the entire year. And there were a couple factors tied into that, but one of the biggest was the fact that they are not seeing as many people sign up for their next plan. And that's the company's installment plan for new smartphone devices. Basically, they've been trying to attract, and they've been doing this really aggressively, trying to attract more subscribers who pay for their smartphones outright, but in turn don't have to sign contracts and can upgrade more frequently. That's been part of the way they've been competing in this landscape with other carriers. And the fact that we're seeing less people sign up for that plan is very worrying moving forward.
All right, Morgan, thank you so much for coming by. Morgan Brennan.
All right, earlier today, strong earnings from another Dow component, and that would be Boeing, helped by big demand for commercial jets by airlines around the world. Boeing says it now has a backlog of more than 5,000 orders worth more than $430 billion. Even though profits shot up 18%, investors were looking for more, and that sent shares 4.5% lower today.
More troubling news for the auto industry. Federal prosecutors are reportedly looking into Japanese auto parts maker Takata and whether it misled regulators about the number of defective airbags. The report follows a major warning from the federal government regarding those faulty airbags that the recall has now been expanded to nearly 8 million vehicles. And for the owners of some of those vehicles, they're being told not to allow people to sit in the front passenger seat until the airbags are fixed. Phil LeBeau has more.
After numerous recalls about faulty airbags over the last few months, the federal government is now telling millions of car owners to get their cars fixed immediately. The warning by the National Highway Traffic Safety Administration covers 7.8 million vehicles built between 2000 and 2008. Models from 10 automakers have defective airbags that need to be fixed. The airbags are built by Takata, a Japanese company that is one of the largest auto suppliers in the world. The warning has created a bit of a problem. Dealerships say it may be weeks, even months before they have the parts to fix some of the airbags, because the priority is to repair models in high humidity states, like those along the Gulf Coast. Investigators believe humid conditions are causing the airbags to malfunction and send metal fragments flying when the airbags deploy. Because of added concerns about vehicles in southern locations, General Motors is sending letters to a select number of customers, telling them not to allow anyone to ride in the front passenger seat until the airbag is fixed. Toyota is going a step further and may disable the airbags of some recalled vehicles until they can be repaired. And that may take a while. We've reached out to Takata to get a sense of when it believes repairs will be finished, but we've yet to hear back from the company. So for now, there are millions of Americans driving vehicles with faulty airbags. And as they're driving around, they may be asking themselves, am I taking a risk counting on an airbag that may or may not protect me during a crash? Phil LeBeau, Nightly Business Report, Chicago.
Switching back to the economy now, inflation is in check, and how. Consumer prices rose just 0.1% in September. Key factor? Falling energy costs. Over the past year, consumer inflation has risen just 1.7%.
And that low inflation is why Uncle Sam is giving 64 million Social Security beneficiaries such a small raise next year. The government will increase benefits by just 1.7% in 2015, which averages out to about $22 more for pensioners and the disabled. This marks the third year in a row that the annual cost of living increase will be below 2%.
Still ahead, Johnson & Johnson making a big push into an area that many other drug makers are not, a vaccine for Ebola. That story next.
The U.S. tightened rules today on travelers coming from West Africa. There are now special Ebola symptom screenings and fever checks. Meanwhile, the race to develop treatments to combat the spread of Ebola has kicked into high gear. Johnson & Johnson has emerged as a leader in developing an Ebola vaccine, and its shares rose nearly 1% today, one of the few gainers in the Dow. So how close is J&J or other drug makers to finding an effective vaccine or other remedy? Meg Terrell takes a look.
You probably know Johnson & Johnson as the maker of Tylenol, baby powder, and Listerine. The healthcare giant also has a major pharmaceuticals business, and today said it's making a big push in the fight against Ebola. J&J is developing a vaccine for the virus. The company said today it'll invest $200 million to accelerate and expand production. It aims to make more than 1 million doses of the regimen next year, a quarter of which it expects to release for clinical trials in May. J&J is one of several drug makers working on an Ebola vaccine. It joins GlaxoSmithKline and Newlink Genetics, among others. The question is, can development happen fast enough to help in the current outbreak?
It's actually the production side of vaccine that caused the difficulty, especially when you're working on large scale. They claim they'll be ready to go into testing by May. To me, that sounds ambitious, but I hope.
More than 9,900 people have been infected by Ebola, primarily in the West African countries of Guinea, Liberia, and Sierra Leone. More than 4,800 people have died. J&J says it's working with the World Health Organization and the National Institutes of Health on its vaccine. It and others have received government funding. But the lack of financial return for diseases not frequently seen and affecting primarily poor countries means companies usually don't focus on viruses like Ebola.
We really ought to use this as a trigger to have a discussion about a policy regarding emerging infectious diseases, because the world is shrinking, and what happens in emerging markets ultimately, as we've discovered, comes to mature markets.
Many companies are also working on drugs to fight Ebola. There are no currently approved vaccines or drugs for the virus. And while the financial return, according to Les Funtleiter, an investor, would potentially be small, the benefit to human health would be great. For Nightly Business Report, I'm Meg Terrell.
GlaxoSmithKline out with an earnings beat and a cost-cutting plan, and that is where we begin tonight's Market Focus. The drug maker pledged it will cut expenses by $1.5 billion over 3 years, and it will explore a spin-off of its HIV business. This as earnings topped estimates, but revenue fell a little bit short. And separately, as Meg Terrell mentioned just a moment ago, the company is working on an Ebola vaccine, and today it said that it expects to have the first doses ready for testing, maybe even late this year. With that, shares were up nearly 2% to $44.41. Shares of Biogen IDEC fell hard today after the company reported sales of its new multiple sclerosis drug fell short of expectations. The company also confirmed the first case of a serious brain infection in a patient who took the drug and recently died. Not even earnings that whipped analyst forecasts could turn the tide. The stock wilted $17.70 to $309.07. Dow Chemical saw its profit jump last quarter, helped by higher sales in its plastics and performance materials units. Earnings and revenue topped the street's forecast. The company also out with a plan to cut costs by $1 billion over the next 3 years. Despite the cost cuts, the CEO says the company has been able to deliver for shareholders.
We had strong results. It was a good quarter. We're very pleased with it. Good cash generation. And year to date, our share buybacks are on track, $3.4 billion, dividends $1.3. So we're generating a lot of cash, and we're giving that a lot to our shareholders as we bring our other big projects online next year.
Nevertheless, shares were off more than 1% to $47.61. Stanley Black & Decker saw the shares rise on strong results, profits up by more than 40% as the toolmaker managed to increase margins and sales. That's usually a good thing. Tightened its earnings outlook for the year, though. That didn't seem to bother investors. The stock up 1.5% to $87.41.
It was the opposite kind of story for Norfolk Southern. Profits at the railroad operator rose, but not enough to meet analyst estimates. Revenue also came up short. The CEO also commenting on the recent merger talks between CSX and Canadian Pacific, saying he doesn't see the potential in rail mergers.
There are significant issues around any kind of rail M&A of a major scale. Most importantly, it's a regulatory environment that would not be conducive to doing that, and in which even if you could gain regulatory approval, you would have to give up, we believe, most, if not all, of any of the potential benefits.
Shares of Norfolk Southern fell 3% today to $106.50. A disappointing outlook sent shares of 3D Systems tumbling. It's projecting quarterly revenue below analyst estimates and cutting its full-year revenue guidance because of manufacturing constraints to meet demand for 3D metal printers. The stock dropped 15.5% to $36.67. Caterpillar also had a difficult day. The construction and mining equipment dealer said that its dealer sales fell 10% for the 3 months ended in September. Sales in its mining equipment division hit the hardest. The stock was off 1% to $94.57. And then after the bell, Visa hiked its quarterly dividend. The credit card company upping the payout by 20% to 48 cents a share. That'll be paid to shareholders in December. Shares spiked initially after that news. During the regular trading day, the stock was down 1% to $210.92.
FedEx anticipates a record-breaking holiday shipping season. The delivery giant says it will ship nearly 300 million packages between Black Friday and Christmas Eve. That's nearly one for every single American. FedEx already pegging Monday, December 15th, that to be the busiest day of the year, with more than 22 million packages going out.
And as we head into the holiday shopping season, some big banks and credit card issuers are sending customers new cards containing cutting-edge technology designed to tighten security and cut down on fraud. Kayla Tausche has more.
For millions of Americans, the month of October brought a thick envelope in the mail, carrying a familiar plastic card, but embedded with a new metallic chip. As banks and credit card issuers race to get more secure cards in the hands of shoppers ahead of the holiday season, First Data's Paul Kleinschnitt says each new security breach has been a reality check.
As there's additional breaches that are happening, additional exposure to the ecosystem, our issuers are accelerating their plans that were already in play.
Since then, this EMV technology has come into focus. It's popular abroad because it requires a unique code to carry out a transaction, not just a swipe.
When Britain switched to a chip and pin system, they cut fraud in stores by 70%.
Not surprising then, the banks and credit card issuers focused first on replacing cards most used by international travelers and frequent flyers to cut down on overseas theft. But this month it went mainstream, with Bank of America replacing old debit cards with chips. More banks and government-issued cards will do the same early next year, anticipating a widespread change at the checkout that requires retailers to get new terminals too. President Obama highlighted the issue at the Consumer Financial Protection Bureau last week.
I'm happy to say that the private sector is already deeply engaged in this effort. Today, a group of retailers that includes some of our largest, Home Depot, Target, Walgreens, Walmart, and representing more than 15,000 stores across the country. All of them are pledging to adopt chip and pin technology by the beginning of next year.
While the banks will pay a bit more to put chips in cards, the retail terminals can cost up to $1,000 a piece and require training for employees and consumers to use. Though there's one new motivation to upgrade: Apple Pay.
There's now not just one justification for new terminal purchases for a merchant, there's three. So the point is NFC and EMV and encryption are enabled in all the new generation terminals and point of sale.
By this time next year, some 500 million new chip cards will be in our wallets, though by some estimates, only 60% of retailers will be ready. For Nightly Business Report, I'm Kayla Tausche in New York.
Coming up, Swedish massages for rabbits, watching grass grow. That's how some of your taxpayer dollars are being spent. And that's not sitting well with one senator. We'll explain right after this. Are you saving enough for retirement? Well, too many of us aren't. A new Wells Fargo survey found that middle-class Americans have saved just around $20,000 on average for their golden years, and that's down from $25,000 a year ago. The report also found that 4 in 10 middle-class folks between the ages of 50 and 59 are currently not saving at all for retirement, and about a third already admit they won't have enough money to survive in retirement.
Well, you know the old saying that one man's trash is another man's treasure? Well, as he does every year, Oklahoma Senator Tom Coburn has a twist on that. That one man's prime government expenditure is another man's wasteful pork barrel spending. And it's all listed in the 2014 edition of the Waste Book. $25 billion worth, including the part about monkeys being trained how to gamble. Eamon Javers joins us now from Washington with more on what's in the senator's crosshairs. What did he find, Eamon, including the monkeys?
You know, Tyler, I wish I could be trained how to gamble, but Senator Coburn found 100 specific items here that he says are just waste, fraud, and abuse in the federal budget. Let me read you a couple of the highlights here from the report. This is the kind of thing that gets under his skin. He releases it every year. It's sort of a name and shame operation by Senator Coburn up here on Capitol Hill. He found $331,000 for a study involving couples sticking pins into voodoo dolls to see if they stick the pins into voodoo dolls more aggressively when they have low blood sugar and they are hangry. Another one was NASA was forced to spend $350 million to build a launch tower that was immediately mothballed because the type of rockets it was built for had been discontinued years ago. They were forced, nonetheless, to spend all that money by the politicians here in Washington. And finally, this gambling monkey thing, $171,000 for a study to see if the monkeys had the same misplaced belief that we all have when we're gambling, that when we get on a hot streak, it might actually continue.
So, Eamon, what did those scientists discover in all that research?
They found that monkeys are just as bad at gambling as we are, and that when they were on a hot streak, they did tend to believe that that hot streak might continue. There's no basis in fact for that. The monkeys thought it, and human gamblers think it as well.
What about
also another one here on sports stadiums is interesting. $146 million for sports stadiums. Coburn singling out here the tax exemption on government bonds for sporting facilities. So that's an interesting one for sports fans around the country.
All right, Eamon, thanks very much. Eamon Javers reporting from Washington.
And finally tonight, one of the few remaining original Apple I computers sold at auction today for a stunning $905,000, far more than forecast. The pre-assembled computer is believed to be one of the first batch of 50 machines built by Apple co-founder Steve Wozniak in Steve Jobs' garage back in the summer of 1976. The name of the buyer not disclosed. And you know, Tyler, you can get a brand new Mac for about $1,000, but of course it doesn't have that nostalgic, romantic.
And I wonder what the original Apple I or Apple II cost. Probably nothing near.
A few hundred dollars.
A few $100.
Yeah. That's Nightly Business Report for tonight. Thanks for watching. I'm Susie Garrow.
And I'm Tyler Matheson. Thanks from me as well. We hope you have a great evening. And even more than that, we hope we'll see you right back here tomorrow night.
Nightly Business Report has been brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
I'm Susie Garrow with a Nightly Business Report news brief. Two powerful forces combined to make already jittery investors even more nervous today. One trigger was another sharp drop in the price of oil, down $2 a barrel to a more than 2-year low. The other was the shooting of a Canadian soldier in that nation's capital, followed by gunfire in Parliament before the gunman was killed by police. Volatility spiked and rattled investors sent stocks tumbling. The Dow lost 153 points, the Nasdaq down 36 just one day after its biggest gain of the year. The S&P fell 14 points. The recall of cars with defective airbags was expanded to nearly 8 million cars. And Social Security recipients will get a cost of living increase next year of just 1.7%. Be sure to tune in to Nightly Business Report right here on your public television station.